Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar's bearish cloud returned overnight as concerns heightened over a potential trade war between the US and major trading partners such as China and the European Union, which is still concerning with the recent tit for tat that's been going on between the US and with other nations when it comes to the tariffs. Anyway, the other thing that's concerning is the fact that the expectations of a fourth interest rate at the US has come back on the agenda as well, and now could see a rate hike for the fourth in December. So keep an eye out. Due to the fact is that if this continues, then we could see the market look not towards 73.20, but to 72.55 as a potential target. It is viewed that the two upside attempts from 74.60-65, posting a high around 41, still a good opportunity to shorten the market. As I say, I do believe the market will weaken further in the next 24 to 48 hours. Looking at the euro price action overnight, the market went straight for that 117.20-30 resistance. And what you can see is clearly the level was rejected after posting a high of 117.19 overnight. It is now ascertained that the market may be caught in a bull trap after the overnight's rejection and therefore could see further weakness in the coming session, with the immediate target holding at 116.15. The base beneath there is at 115.55 and the crucial level I see at 114.85 as a break beneath there would give further scope towards a target of 112.80. Now, what started all this is the fact that the dollar index recaptured the 94 handle overnight and closed firmer this morning at 94.32. A break above 95 would give the further weakness to the euro. So we keep an eye very closely on the dollar index in the next trading 24 to 48 hour session. Once again, the dollar yen rebounds off the lows, not quite at 109.60, but 109.30 yesterday. And from there, has actually staged a further rally and posted a high of 110.21 this morning. It is expected that further weakness to the yen as the dollar strengthens should see a further rise towards the target coming in now at 110.45, with the objective still holding at 110.85 to 111.10. Weakness towards 109.65 or down towards 108.90 is now seen a base for dollar yen. Although the pound did post a bullish outside range day last week after the Bank of England kept rates unchanged, but more importantly is the fact that the voting members came out from 2 to 3, making it 3 out of 9, that expects a rate hike to come very soon. The other surprising thing is that the market learned that Jonathan Haskell will replace Ian McCafferty, which is a little surprise because he is the Bank of England's Monetary Policy Committee. And from there, the pound did weaken. Therefore, I believe Ian McCafferty was a little bit more hawkish, but nevertheless, with Jonathan Haskell, we have to see what his stances are or his views on monetary policy, and also if he's a dove or a hawk. Nevertheless, I'm still bullish, and at this stage, this has given us opportunity to buy the dips from 131.90 to 131.40, as I believe the market will still look towards the target somewhere around 133.15 to 60.70. It's disappointing that the gold has failed to stage any rebound since testing the low of 1,254 overnight, this being a fresh year low. And also the fact is it's getting a little bit concerning because last time we were here was back in December 2017. Trading at the moment at 1,259. The base is just holding at 55. I stop at 52 if we go through 55, but hold my longs at these levels, and I do anticipate a rebound eventually up towards 64, 67 to 72. We are getting oversold, So this could be this time now to start thinking about buying gold. Rounding off with oil, well, the market rallied again from Friday's 5% surge. We got another 3% overnight, or close to 4%. And now, concerning the fact that we could be looking at higher levels, what initiated the move was the fact that the US said nations must cut Iran crude imports. Otherwise, they could find that they've got in sanctions on them. It's very interesting how this is all turning around, but nevertheless, it has given the market a little bit of bullishness, and therefore we could see further gains if this pattern continues. The upside target at this stage is at 71.80 to 72.80, with a support seen at 69.20. But the trigger level is way away now to the bear case, which is at 67.20. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.